Mark, can you talk to us a little bit about some of the refinancing opportunities that you're seeing in the market in the Nordics at the moment?
Yeah, I mean, the refinancing opportunities, not so many of them, to be honest. It's more comes about from any A to E that you might have, but there are very few of those, to be honest, as you have a very large term loan A contribution in the capital structure in the Nordic region, which means you're amortizing your debt by contract, therefore you don't have the maturity problem. Where you do find refinancing opportunities, it's for dividend recaps, and it's also for situations where you might want to change a loan financing into a bond financing. So that's where it comes, and that's both for local bonds as well as for international European bonds as well.
You've touched on bonds. That's something that I know across Europe that the sort of the take up on that has been quite spread, and there are some countries that are really, really active and really keen on the bond market, and then there's other markets when you talk to people there, they're sort of like, oh, bonds, oh God, I didn't really realise that was an option still. What's the situation when it comes to the Nordics?
So the Nordics, first of all, you can't really view it as the Nordics. You have to look at each country individually. So the Norwegian market has been well established and is a great example of a local bond market. The other countries in the Nordic region are just establishing themselves as far as bonds are concerned. And if we focus on Sweden being the largest country, it's developing fast. It's not anywhere near maturity yet, but you're getting now a lot more volume than you used to. There's a lot more interest. And I think, for example, in the Bravida bond, Jussi from Nordea was saying that in the SEK tranche of that, there is over 100 investors from the region.
Wow.
So you can see there's a lot of latent interest there. And there's a lot of activity to try and make the market more mature and emulate a little bit the European market.
Okay, let's finish off with a really quick look at high yield. What are you seeing in the high yield market?
In terms of
activity there?
Oh, the activity, it's well, it's a very volatile market. So if you asked me the question 2 weeks ago, it was extremely hot, everything was doable. As soon as the announcement from the US was that they're looking at reducing their quantitative easing, everybody feared interest rates, and the market has cooled dramatically.
Okay.
You know,
so is it something by the time that this video is online, it might have all changed?
Well, it is changing now,
Okay.
and you know, in terms of you look at the iTrax, and it's out 100 basis points. So this is the thing with the bond market, is it moves very, very quickly, and so as any capital market, you have to be able to strike whilst the market is there. It won't disappear, and what's happening is, as it's going through this period of change, you get volatility, and that pushes pricing up. So even if people adapt to a higher interest rate environment, once the volatility is gone, things will settle down and become normal again. And I think you'll still find lots of money inflow, and it will be a very buoyant market going forward.